Let me get my screen share going too. I was looking at two. One was called Mighty Networks and one was called Circle. And when I got onto Mighty Networks, at first I was like, it had like some kind of a contest feature, and I'm like, ooh, contest. Like maybe we could do like a regular, like trade of the month contest, or I don't know. I still am thinking something like that now. So, but it wasn't. It wouldn't have worked that way, that feature. So, but it did spark the idea of having like, some friendly competitions. Let me share my screen. But then I got onto the Circle platform, and that one is probably the way we're going to go. And one of the features it has is courses. And so what it's going to let me do, I'm going to still have all of our channels and things that we have. It's also going to let me create all of our content that just is kind of sitting on YouTube and just sits in links on a Google Doc. And it's going to let me create courses, and you can kind of see what you've done and go through it. And so I'm very excited about that because, right off the bat, there'll be like a trading foundations course, an options course, a trading plan development course, a market posture course, right? And then, Glenn and Gary and I can kind of put our heads together and even create like, hey, if we were to, string together some content for a couple of different things, what would that look like? So I'm excited about that. And it does have like a gamification where it's like, as you are on it, it marks it and it lets you advance. And I was like, oh, that could be cool where, certain members will have the ability to start streams or something. The prospects are there. It looks good, and I think that's probably the way we're going to go, which means that I'm hopeful in the next week to then be able to start inviting people over there to test it out, and then help once you're there as we have a group migration. Because when it's done, this channel, there can't be ambiguity between channels. I thought to myself, would we leave the old channel and anyone who's pretty comfortable there? No. Why? Because if something was happening here and other people were like, what? There's a whole nother. So this channel will die. We'll have a funeral, maybe, we'll have some sort of a formal ceremony, and then we will put it down. Taps it is, David. Okay. Quickly, disclaimers, not brokers, not advisors. We don't give advice or recommendations. This is for educational, illustrative purposes only. The agenda, I was looking at it too. It records automatically. Like it's going to rearrange how I'm like, do I need YouTube as a backup? It like records it and posts it to its channel that the recording's from automatically. It does some really cool things. So it may reinvigorate or reimagine how some of the other things that we do. Today we're going to do market posture. Obviously, we're going to look at the economic calendar. It's employment week. It's an interesting one, I thought, right? Usually when the first Friday of the new month is the first, I swear, don't they usually kick it? Maybe I'm thinking if there's a holiday, they kick it to the next week, because theoretically right now on October 30th, the ADP October private payroll number comes out. It's like, well, when did you stop processing the data to make the report? Because you're going to be, Anyway, neither here nor there. But we do have a bunch of jobs reports coming out. So we've got, we'll get to it. Watch list maintenance, no. The new cadence is on Sundays we can delete, but we're not really going to look to search. We don't have time. We do searching on Tuesday evenings now. So what we will do is we will identify the sectors that we're interested in, right? Getting additional stocks on our watch list for. And then on Tuesdays, we can run a search flesh out the watch list a little bit further. A couple of other names I see here. Chief Redneck, I love the name. Welcome. And Steve, as opposed to Steven. We've got a Steve and a Steven, both in Georgia. Amazing. Welcome, both of you. Good to see you. Good to have you. We'll scan the opportunity list, right? What do we mean when we say the early week opportunity list? So we have a watch list that'll have anywhere from 50 to 70 stocks on it at any given time across all sectors. But that watch list is not like, hey, at any given minute, something may just all of a sudden arbitrarily pop up. That's not how trades work. They start to develop, and then they start to set up, and then we wait, and then we see a trigger, and then we're like, oh, look, a trigger. And then we have a stop and a target and a time frame, and we build a trade. And when that trade ends and we get out, it's because that stock's now pulling back. And so if it just made another higher high and starts pulling back, what do we think? Oh, it's setting up again. And that's the cycle. So the question at any given time at the start of the week is, which of those stocks are in that setup mode where it's like, look, they've already pulled back for a couple of days. They're starting to move into that period where we expect them to find a support level, higher low. And then as it establishes support and starts to bounce off, that's when we're looking for our trigger. That's just for bounce trades, mind you. If you have different systems, and that is the flavor of the week for our trading plans, is trading systems, section 3. Those of you who are new, one of the things we like to do on a regular basis is work on our trading plans. There is a trading plan template. If you came from coaching, it should be the same or similar to the trading plan template you received there. And we are on our last round of iteration for our trading plans for the year 2024. We're on section 3 of 8. I actually saw Steve posted a question about his trading rules, and Steven answered, and the community worked exactly as intended. I just want to say that. I was smiling happily as I post facto witnessed the exchange. That's exactly what it's for. We will make sure that all of that same. And the one thing I am a little concerned about is we're going to lose all of like our old stuff, which I'm like, can I somehow like recreate the previous interactions? I don't think we're going to be able to, but that's okay. That's okay. We'll start fresh. We'll move forward. But that was amazing. That's what it's for. Like, this is, if you go through trading coaching, one of the things we talk about it can be a lonely endeavor, trading. The tendency to personalize mistakes, where you're like, I did it again, right? And not be able to process it with someone else who's done the same thing clearly, right? Like I could go lists long of all the things I've done over and over. Like, why do you keep doing that? Where you're able to find vetted, right, unbiased, no one's here trying to push anything. This is the destination. There's nothing to push. You're here. Welcome. No one's ever gonna be like, hey, let me show you this and sell this. Or that's not what we do. This is all about the work. Period. We do the work, the continuity, the trading plan, the record keeping. But part of that is, interacting with other people and seeing it, witnessing it, participating in it. So it's happening. I feel we're on another good push, especially as we find that final home for the community. And I think there's just been a little bit of friction around that. And so I'm excited about that. So anyway, what are we going to do? Let's go do all of that stuff that we just talked about. Now, one of the things that's going to make it so much easier is this process here. It's going to let me go fast, because when we have that new platform, I'll be like, oh, just go run and take the market posture course, and you'll see a video on each component, right? You'll get a sense of why are we looking at that? What are we trying to understand? What are the implications? How do we score it? How does the scoring affect our read on the market? When you get this process right, it just sort of creates this foundation of like understanding of the market. We shift quickly, even if the understanding of the market is uncertainty. We're like, that's understanding. That means your risk level is going to be very low, right? You're not going to put a bunch of trades on if you're like, I'm not sure what's going on here. So Bob says, I was trying to review the tutorial on market posture, not finding a titled video. So yeah, and Bob Rowland, if you just missed, as we move into a new world, that's going to become easier. Right now, the way to find those specific videos is through the content library. And so what is the content library? It sounds fancy. I know you're like, ooh, content library. Show me to this content library. It's a link to a Google Doc. And on that Google Doc is a number of links to YouTube videos with titles. That's where it is. So if you go in, you'll find the content library doc. You'll click on that. It'll just take you into a Google Doc. It's not going to be there much longer. Under construction. Yes. If you it's under construction, meaning it's like being reorganized, but it's still like under construction, but you can still walk through. There's still links available. Sorry, I should probably take that down if it's confusing. There's actually all the links in there are live and ready to go. So it's very disorganized in there. It's a mess. Yeah, for sure. Thank you for asking and helping to bring clarity to that. But like I said, in our new environment, that problem that we never could solve for on Discord will be solved for in the new area. Okay, so let's talk about market posture. What do we see? Where are we going? So I've already added. Me too. It's so funny. I was like working on it yesterday. So I told the partners. I said I feel like I could get it built in a week and start moving people a week later. Let's push to get it. Let's tear the Band-Aid off and move into the new place and just get it built out. Okay. Long term. Oh shit. Sorry, I'm gonna have to. I thought I had everything reloaded. I gotta set my platform back up real fast. We're gonna skip over to the economic calendar and then we'll come back to this real fast as that loads. Okay, let's go to the economic calendar for this week. While does everyone else have that same issue with Thinkorswim? I come in on Sunday mornings and everything is like stalled and I have to shut it down and reinstall or not reinstall, but restart. I prefer to leave it open. I don't know if you guys have the same thing. What do we have coming out this week? Monday, nothing. Tuesday, we do have the Case-Shiller home price index. I mean, things are growing again. No one cares. No one's really watching the real estate as like, oh, what's going on in real estate relative to the stock market. But it is showing that home prices are growing again. Okay, number 2. Consumer confidence. We like to see it hovering around 100. It dipped a little bit, but you can see already we're expecting it to tick back up to 99. Anything above 95 on that consumer confidence is pretty like, eh. If it ever dropped below that, we might be like, whoa, what's going on with the consumer confidence? And lastly, job openings. And this is one that it dipped and then it all of a sudden jumped back up to 8 million. So even now, as it says it might drop to 7.9, remember that 7.9 million is significantly more than we were pre-pandemic in a good job market. So there's still lingering jobs that have gone unfilled. So yeah, take that for what it is. ADP employment was at 143. That's solid maintenance levels. And that was a positive surprise. It was supposed to be less. This month, we're expecting it to drop to 113. Yeah, it's not really problematic, I would say. Now my Thinkorswim is just like stalled out. I don't know if I should start it and stop again. It's taking longer than it should, I believe. Okay, back to ADP. Anything above 100, I think the market's going to be okay with. I wouldn't be surprised if we're still around 140 to 150. This is good, though. This is positive. If we get this or better, fantastic. GDP in the low threes, while inflation settles back into the twos. Love it. Love it. If we can get that. Okay, what else? Pending home sales. Expected to drop a little bit, but like I said, nobody really cares that much. Income expected to tick up. Spending expected to tick up. We also have, I forgot about this even again. I forgot about it on Friday when we looked at it. We also have PCE. We also have PCE coming out on Thursday, which is the Fed's favored inflationary measure. So, yeah, we have expectations for this is to tick up. So from month to month, the expectation is that it might tick up. But year over year, which is really more what the Fed is going to be looking at, a tick down, right? A tick down. So does this support ongoing dovish Fed policy? Meaning, is the Fed going to cut again? Now you can see the core month to month is actually expected to, they're going to call it jump, right? They'll be like, oh, it jumped. I don't know why my Thinkorswim is having a hard time loading today. It's very frustrating. I might have to end up on a different set of charts where my lines aren't drawn. What's going on? Anyone else with issues logging in today to Thinkorswim? I know it's maintenance, but I can still usually log in, you know? Like, usually it doesn't. Is anyone unable to log in to their Thinkorswim right now? Yeah, see, you can log in. That doesn't seem fair to me, right? Why can't I log in? Okay. Everybody else is okay? Isn't that fantastic for me? Let's keep talking about PCE for just a minute. Even though the core PCE is supposed to tick up month to month, year over year, it's supposed to drop. Control-Alt-Delete. But I mean, it's like it's running. Oh, there we go. Never mind. I'll stop bitching and log in. I mean, it is telling me it's under maintenance, but it always tells me that. It's under maintenance every time we do this on Sundays. It's still excuse, Charles Schwab. Okay. It's probably my internet provider. I mean, I guess it could be. I am looking at switching my internet provider, potentially. Okay. Let's finish talking about this, and by the time it's ready, we're gonna jump in. We talked about Thursday. What do we have Friday? Non-farm payrolls. Non-farm payrolls. The Department of Labor. Remember last month we got that big jump, 250,000 all of a sudden. Bingo, bango. This time it's supposed to drop down to 110. Remember that maintenance is 120 to 150. So it would be, oh, there it is. It would be a little less than that. Bob Rowland says, not impressed with Thinkorswim since Schwab took it over. I'm a little suspect of their maintenance as well, Bob. It's like when they first take it over, they first made a statement. They're like, we're committed to blah, blah, blah. And you're like, okay, good. I'll tell you this, though. Ameritrade was disappointing. They kept it, but they never actually worked on it. Like, when Thinkorswim was Thinkorswim, that thing updated every day because literally it was like weekly new features and iterations and like, oh, now it does that. Now it does this. The platform hasn't fundamentally changed in literally, I'm going to say, 15 years. Like, it's been this platform. Essentially, like, every aspect that you see me use has been there for 15. Like, it was like revolutionary then. Interestingly, though, no one's really done anything to catch up with, like, the best things that they do. I'm just, like, baffled by that. But you're right. Like, I wish they would actually, like, put a product manager in charge of it and build it and start, collecting feedback from traders and make it work. It's pretty close. I stopped in 08, and then 09 is when Ameritrade took over. That's essentially when I'm attributing nothing having been done on it since then. Okay. SPY, let's go. Longer term. Weekly. I'm okay with this. It has to break the green line. When it breaks, if and when it breaks the green line underneath, I am going to dial my score back 1/4 point. That's how I see it right now. So I'm at a 1.5. We've been there for a while. We've just been riding that green line. Oh, that's funny, Bob. I will take it back to 1 1/4. Now, 1 1/4 was this red line back here. When it was in this red line back in this area, all the way until about right back here, we were at that 1 1/4 mark. But now, if it comes back down, yeah, that's where I'll be, 1 1/4. Okay, but 1.5 for now. Anyone change theirs? Let me know. Let's have a little ongoing conversation if you've dialed yours one way or the other. Still feels right at 1.5, I think. And I'm not convinced we're going to break the green line. I think that we could see it press higher in a fall rally. Okay, so what do we know? Long-term institutions are intact. They seem fine. No problems there. Okay, so let's look at the trader perspective, short term. The score coming into this is a solid 1.75. We've been there for 6 weeks, almost. Prior to that, we were a 1.5. We've been there for a good while. Okay. I don't feel like there's any reason to change. We just had a higher high. We seem to be pressing at a higher low. Bob agrees. He says hugging the bottom of the range, right? Meaning what? Meaning we hit this higher high. You can see that the stochastics rolled over. It's coming down now. What? That means the sellers have the floor? Not much. A little acceleration. There's their day. They got that day. We're going to have to decide what we do with that day with our volume score. Because it did have slightly above average volume. It was a red day. But look how much of that volume was giving it back up. I don't know. I think I'm going to have to. You can kind of almost hear it. I'm recognizing it myself. I don't want to take it away, but my scoring being objective and empirical says I should, if I should. This will be an interesting one when we get to volume. Okay. Moved yours back down. Okay. So I am at a 175, and I'm going to stay at a 175. Yeah, nothing happened that was outside of the current trend that we're in as we ride along this way. I'm good with that. Steven moved his, no change. Anyone else? Where did we end up on the short term? I think we all agree it's a nice steady bullishness. It's not like this outrageously strong bullishness. It certainly hasn't veered back sideways by any stretch. It's continuing to new high, new low, new high, new low. No change but watching it. All right, fair enough. Fair enough. Let's get to volume then. Unchanged to this point. For those who are new, we started on a 3-year weekly chart. That is all explained in those videos, which will become increasingly easy to find. The second chart we looked at was a 6-month daily chart, and the third we're looking at here is a 1-month daily chart, all on SPY. And for this analysis, you would also need to add a simple moving average, 20 period, to your volume. Let's just make this a little bigger for a second. To your volume. You can see where the smokestacks are, but like that one might deceive you into thinking that was above average, but it wasn't. So we're trying to find these. And what's interesting is you can see we had above average buyers, then sellers, those two washed. Great. They're also over here on the left. They're going to disappear soon. We don't care that much about them. Then we have this one. That was a selling day. Right? That was a selling day. So that is a -1. That's a seller's. And then I have this one here. And we went from here, this is the close of the day before, down to here. So we dropped 583.30 to 578. That's a $5 drop. That's a 1%. And it had above average volume. So press is asking for checks and X's, which I had to delete that drawing tool because it kept shutting my system down, and I haven't gotten a new one, press. That's a great call out for me to go get a new drawing tool. What he was saying is I will come over here and I'll put a check for the buyers, and then I will put an X for the sellers. Oh, look at Miguel. Miguel has something fancy that he's done. Add a drawing like I do. I see what you're doing. I see what he's doing. Yeah, so he's doing this. He's coming in and you can do a text and a highlight, right? So, yeah, you're so fancy with it. That's amazing. So he'll come in here and he'll put a rectangle on it. Whoops. And then change the transparent. Clearly, I haven't drawn this for a while. It comes off the box pretty easily. There we go. So there's one. And there's one. Miguel, so fancy. Look at all his tricks to make copies. And I'm like, I'm not going to do the easy way. What the hell have I just done? Okay. Almost there. And then the other thing you can do, you see I don't use them much because it is a little clunky with your drawings, is you can make a note, text note, and you can put, I always forget where it goes, and you can say, this was sellers. Okay. And then you can move it. Let's see. Activate text note. Sellers. That is what Miguel is doing. It's very formal and fancy. He's probably because he's smarter than I am. I don't know what's going on with this. He's just showing off, it seems. Thank you, Miguel. That's awesome. Very, very cool. He's right. It does make it permanent. So that'll be there when we come back. Now what? Now we score it. But this one here, I'm going to say is also sellers. And this one here is a tie. It's nobody. And you might look at it and be like, but that's a red candle, Scott. That's the sellers. No. Here's why. Because it gapped up, ran higher, sold off, and then finished where? Exactly where it was the day before. That's our watermark, is where did it close the day before? When we say the market's up 1%, it's not from where it opened that day. It's up 1% from the previous day's close. That's the watermark when we say, right, when something's up or down or whatever. And so the orientation of the candles just by color can be actually misleading. We need to see where is it on this day relative to where it was on this day. And on this day it closed here, and on this day it closed here. So what did the buyers or the sellers do? Nothing. Nobody gets credit for that day. On this day, the buyers ended it here the day before. Then it dropped down to here. So this one, it does. So this one is the sellers. So there's a 0. It's 2-0. You had more buyers. Well, they bought all the way up to here. They started the day here. Halfway through, they got here. But by the end of the day, it was back here. So basically what happened? The sellers overwhelmed them. Nobody gets credit. So for me, these two over here on the left are a wash. This is for sellers. This is for sellers. It's 2-0. Now remember, a tie goes to the buyer. So if it was 2-2, I would give it a 0.25. A 0.25. If it's a 2-1, I'm going to give it a tie. But it's a 2-0. So I'm right on the edge. I feel like, especially now, if you look at the sanity check, we went from here to here. That's very close to a straight line now, right? We've lost ground in our sanity check for a while, right? It's at least a drop to 0. Yeah. Actually, it's already a 0. Sorry. So it's not at least. For me, it's already to a 0. What I'm looking at here is potentially a negative 0.25, right? Where we say, hey, is a 2-0 enough for us to just flag it with a minus 0.25? I don't think you have to. I just think it's like, yeah, that's the conversation we should be having. If you were at 0.25, definitely a drop. Yep. Steven went to a minus 0.5. Okay. I'm not sure if I feel that strongly for the sellers, right? So I'm going to duplicate this and point it here. And then I'm going to duplicate this and move it here. And I'm going to activate. And I'm going to say that is a tie. Can't I double click over this? Fancy. Change note. Tie. Okay. And these two are going to fall off. Yes, Bob, you're right. I just was copying and pasting and then changing. That's what we're scoring right there. I'm going to drop mine to a minus 0.25. That's our first sign of negative weakness since coming out of the August correction, where it was the last place that we saw it, right? Volume was really what we saw back there as well. You can kind of see when we first turned to August, I want you to notice, here was July. We were a 5.75. That was July 14th. On July 21st, what was the first sign? Right there. The first sign of weakness back from July 14th to July 21st. Let's go see what that looks like now. Between here and here, right? Nothing looked bad yet, you guys. What was the first thing that flagged us for some potential weakness? Volume. And that preceded, at this point, the market was down about 2% like it is now. Well, so when I'm bullish, Stephen, you're right. I don't need volume. I expect that if I'm at a 6 score, I'm not going to have any of that be volume related. Right now, what I'm saying is I'm a little concerned. So last week we said the VIX was a little concerning for us. Right? Last week I was a little concerned by the VIX. It hasn't played out. I mean, it flagged, but it hasn't really done anything. So I'm like, oh, maybe not so bad. This week, what I'm saying is I am calling out volume. We were a 5.75. And then the next week, the first thing that we saw get bad was volume. And from there, that's when the market turned into a correction. This happened. So I'm not going to, no. Earnings does not drive VIX. No. Earnings only drives individual stock volatilities. But remember, VIX is broad market. That's S&P. So, could we see a slight elevation due to earnings season? Maybe. But we really look at the VIX as independent of that. Now, what does this mean then for us? Nothing. I mean, I'm not like this is what I'm saying is I'm not saying, oh, because the volume score dropped, I now am predicting the market's going to go into a correction. I'm not saying that. What I'm saying is the last time we had a correction, that was the first flag, the first what was right? If we were to go back prior, this is again, you guys, why I love being able to track a historical record of how I analyze the market. Because I can go back and find these instances where the market drops and be like, okay, back here in April, what was the first thing to drop? So if this is where we flag that this thing started to get weaker, we can say it was in the volume, it was in the trend, it was in the VIX. What does that mean? It means that we probably broke support, had a spike on the VIX, and the volume showed more sellers than buyers. And when we saw all that, what happened? It turned into this, where it kept going. If we go back and we look at this one here, I would actually go to the first part of weakness. We'll call it July. Where did we see it? Short-term trend. The next week we saw it in the VIX and we saw it in the volume. So those are the places that we're going to see it. Right now, where have we seen it? Only in the volume. As of right now. Only in the volume. Maybe in the VIX. We'll see. We haven't scored that yet. Okay. Woo, I'm kind of going slow. I've got to speed up. Let's get to major market. We've looked at all the news for next week already, so that's good. We've got to get through posture and the posture and the watch list. This week we're on risk management. We're past section 3. I lied. Last week was section 3. This week we're on section 4 of the trading plan. Risk management. That's the section of the week. That's what Glenn and I are going to be talking about during the working sessions on Tuesdays and Thursdays. Okay, let's go through the major market. What do we have? We have a bullish foundation. NASDAQ on top, followed by the S&P. We have the Russell currently in the third position with the Dow lagging behind, everything in an uptrend. Nice, bullish starting point. Appetite for risk, positive. We go to 133. What do we have? Very similar. Still everything in an uptrend from April till now. Still with the NASDAQ on top, with the S&P in second. Who's in third? We've got Russell. Who's fallen behind here? We've got the Dow in this tiered system, right? So all of that so far. But is that going to hold up as we get to the 66-day time frame? I don't know why this ad is in my way. 66-day time frame. Now, here you'll notice we've seen a significant drop in the Russell. So the Russell's lagging in this situation, but by way of everything else, we still have the Dow on top, the NASDAQ on top, followed by the S&P. Now we have the Dow in third. One of the things I've been talking about is if we see the Dow start to show more strength, that might then be interpreted as defensive. I don't see this defensively. In fact, you can actually see that the Dow has started to give up its position near the top because it's unable to sustain with the rest of them because it's not defensive. So this hasn't improved. In order for me to move my score higher than a 0.5, I need to see the Russell participating in a bullish fashion in a leading position. And it's not. It's great, right? Stephen, great comment. It's great to see the NASDAQ back at the top. That's what we hope to see for a sustainable bullish market indeed. Come on now. Okay, now let's just take a quick... So there's no change in the score for me, but let's take a quick peek at the 22-day. What do we see here? More of the same. NASDAQ moving to the top. The Dow and the Russell trying to figure out who's going to be in what position in third. Awesome. That's a nice solid. It holds its score fine. Let's go look at sectors. Same basic construct of the analysis. So for those of you who are new, what are we doing here? We're doing 9 months, which is 200 days. And everything is set at the same starting point. So now we get to see where is everybody. If everyone was 0, where are they now? And then we do that again from 6 months, 133 days. And then we do it again from 3 months, 66 days. And then we do it again from 1 month, 22 days. And we get to see the strength, the momentum, the shift, all of it. Now we started with appetite for risk with the broad market. Now we're going into money flow with the sectors. Who's at the top? Crazy ass utilities sitting at the top. I don't know. Then what? Financials, which is bullish growth. Communication services, bullish growth. Industrials and technology. So it's basically you've got like this defensive sector having an identity crisis, convinced it's a growth sector. Like, no, energy's growth now, or utilities are growth now. We spend too much money growing things with electricity now, and the argument's there. I'm not denying that. The first sign of anything other than that is materials, right? These are all growth right in here. Then materials dropped significantly. Consumer staples, which had been a leader and actually is still defensive down here. You've got consumer discretionary down here. And then you've got energy all the way at the very bottom. Healthcare and energy down towards the bottom. Now, how does it change as we look at different time frames? Not much. Utilities still up at the top. You still got this core group of financials, technology back in the mix, right, Stephen? You've got discretionary moving back into the mix. Those are a couple of old favorites that we needed to see move in. You've got communication services there. You've got industrials there. Like the mix, the crew is there. Staples is down. Healthcare is down. Materials is down. Energy is down. We go to 66 days. Utilities at the top. And for a while, the problem was we had utilities at the top, but we only had like one growth sector. And we said, in order for us to move our score with utilities at the top, we're going to have to see more growth sectors. Okay, well, what do we have? We've got discretionary. Yeah, well, that was hugely led by Tesla, but it is what it is. It moved the group. We've got financials. We've got communication services and technology. 100% I agree. This has done enough to earn another 1/4 point. This is what we were kind of looking for. So that's... no, that's not what I wanted. That's going to bring this up 1/2 point. Or not bring it up a half, bring it up 1/4 to 1/2 point. Where is everybody else on sectors this week? Let me know. Looks good, though, right? That looks good. I like seeing that pick up some strength. The VIX is that last piece. If the VIX gives us a negative signal, we'll drop into the 4s. I'm not overly concerned. That's 1/4 point. That's 1/4 point over a 5-week period that we've dropped. It's stabilized. It's sitting there. That's during the month of October, a historically, notoriously difficult month for the market. Let's go finish this. We seem to have a pretty good... Ooh, Steven gave it a 0.75. Okay, Steven. Okay. He's like, I loved the sectors. We've been waiting for some of that. All right. Okay, we do have to lower this. It was technically a higher low. Right? We came down, held Friday, Thursday, Wednesday, Tuesday. So here's where we were last week. We were coming down. We thought about it there, but it just kept coming. Stable turn right there, higher low. Now, could this easily turn into a lower high based on how it's moving right now? Yes, 100% it could. But the score is the score. We don't get to preemptively look ahead and be like, well, it might drop. Nope, that's not what I wanted. I meant to go down 0.75. Sorry, I'll get it. And there it is. What did you do with your VIX this week, everybody? I lowered mine 1/4 point because of the higher low and its escalation. Do you agree? Do you disagree? Agree. Yes. Twas a bumpy week. 'Twas indeed, sir. Okay. All right. There it is. 4.75. Still bullish. Am I concerned? No. Right? Let's go back and look at what does it look like when it drops concerningly? Here it dropped 1.5 in 2 weeks. Here it dropped 0.75 in 1 week. That's concerning. We have dropped 0.75 over the course of 5 weeks. Now, at this point, it does need to stabilize for us to not be like, look, we can't. It's going to be a sneaky decline, right? As of now, I think it's just this is how we got through the month of October. Let's go look at the month of October relative to our posture. So from here to here, our posture did decline. And yet we got a great bullish trading window. And we have another bullish trading window setting up. That's how I'm processing that minus 0.75. That's just like normal ebb and flow in the market, but not something that I believe I need to interpret bearishly or even concerningly. Right? A 4.75 is still strong. Losing 0.75 of a point over 5 weeks is not overtly concerning. That's how I'm seeing it right now, which means that I look at this current pullback as holding up as a potential bullish window. Who's with me? Steven said he's only a 5, or he said he's a 5. It's only a 0.5 difference. It's not a big difference, right? It's not fundamentally, there hasn't been enough that we're like, oh shit, now what? If you're like me, you probably still have some bit of a hedge on. I hedged, right? Same range too, press 100%. Okay, great. That's our posture. Real quickly, I'm going to look at the trading plan. We wrapped up our systems. You should have at least one system, at least one. Ultimately, you'll probably have 2 or 3, maybe even 4. But at least one where you have a fully developed set of rules. Now what? Now we are on to our risk management. You need to make sure you have a good sense of portfolio heat. That's overall trade portfolio risk, trade risk, how much risk per trade for any given systems, how many trades at any given time, how are you going to make adjustments to these numbers based on market conditions, how are you going to have a direct correlation to your current market posture and how those adjustments occur. Do you have tsunami indicators that lead to hedging, right? What are we looking at? We look at the VIX as a primary. We look at a couple of other things ongoing. What are the things that would cause you to take a break? This is one that a lot of people don't define, and I think it's super important that you not just define what would cause you to take a break, but define the break. What does that mean? It means you take 1 week off, no trades. You can manage what you're in, but take no new trades. The funny thing is, usually whenever I force a 1 week, it's like a penalty box, right? You just need a little time. Anytime I put myself in that, usually I last 3 days, and then a trade starts setting up, and I'm like, you know what? I feel like I'm okay. But I do think it's important that we have an ability to say, hey, I might need to take a step back from this and reassess. Thanks, David. Good to see you. See you tomorrow. Okay, lastly, let's just run through the watch list. That's it. That's the trading plan section we're on. Let's make sure that we get some interaction about it. We've had 2 weeks in a row, good interaction. We were a little better on week 2 than we were week 3, but let's make week 4 a concerted effort again. Apple's setting up for a trade, if not for the fact that earnings are coming out on Thursday after market. Thursday after market. You don't have a lot of time. I mean, you could try to take like a little 2 or 3 day trade out of this if you thought it could make a pop, but be careful holding through earnings. Financials got smashed a little bit this week. We're gonna have to see what we think about the dust, if it's settled or not. Amazon, uncertain still. APO, that's a financial. I still think it looks great, although you've got earnings on this one coming up sometime soon. So you got a couple weeks. No, you don't. You got till the 5th, not the 15th. Uplovin, no, that's a little overextended. AXP. It was a big chunk of volume, but it didn't break the 50. If it can hold, I still think we have viable viable financial trades setting up. Bank of America, you can see it like turned and just gave it all back. But look at the volume. It wasn't a lot of volume. I don't think it's necessarily catastrophic. BK, still valid for a setup. BX, still valid for a setup. Still strong. Caterpillar, you've got earnings coming up, the industrials. For me, as we talk about what sectors would be good to search, I want to put industrials on there again. I feel like we just did it, but the sector as a group looks better than some of the individuals that I'm tracking. Now, I felt like that recently with utilities, and when we did a utility trade, I ended up in XLU, as did a number of people in the group. Did some people take Southern SO for that utility? Or was everyone in XLU? Or did anyone take one of those high flyers? I didn't think anyone went with like PEG or PGR. Or not PGR, that's Progressive. PEG or the other one. I feel like most people ended up like, yeah, XLU seems fine. I don't need to go with that crazy shark frenzy stock. That makes sense to me. It's the same thought process here, I think. As I look at Caterpillar, I'm like, it's kind of iffy. But when I look at XLI, I think that's got some strength right there. And so I think I might rather end up pulling the trigger on XLI this week as an industrial consideration, rather than having to pick the individual. AFL is still a good. You know what? I think that they're gonna hold up. Yeah. I think that if you're in anything financial, I think they're gonna hold up. They sold off, right? But without volume. So let's go look at AFL one more time. Now, I got a message. If anyone is new and you're feeling like, what am I doing here? Put that question to the group. Put that question to the group and watch people start reaching out to help out. The newness is going to be easier when we switch to Circle. But one of the things I'm going to direct you to, give me a few minutes after we finish the watch list, and I'm going to go into the Discord channels to show everybody, to show the new people a few things. But yeah, Aflac, I'm a little concerned. Aflac did actually have big volume, but it hasn't broken the 50 yet. If it doesn't break the 50, I think it can still hold. But you'll notice you've got earnings. So Aflac of financials is definitely one I'm a little bit more concerned about. Got stopped out on Aflac. Okay. Yeah. I would have thought, back in this, for me, back here when it had this engulfing and then it dropped, that was it just couldn't hold up. Okay. CMG, earnings in a couple of days. If you're still in it, be careful. Coherent, still setting up. This still made it higher high, higher low. If it turns and it convinces me that it's popped out of this, I'd like it. The Dow still looks fine and bullish. Fastenal looks great. Okay, so there's my favorite. I changed my mind. I do like XLI for industrials, but I like Fastenal. Real strong, real good looking setup. I think that looks good coming up this week. There's another financial. Here's Bitcoin, kind of sideways. GEV did well on earnings, but it's overextended. Nothing for us there. Gold, overextended. Google got earnings coming up here, so just be careful there. Goldman, that's a hiccup for sure, but it's still valid to me. Look at this big, huge engulfing pattern on below average volume. I still think this is set up. This is the financial industry does this. Like it shakes things out, and then all of a sudden it's fine, and you're like, "Whoa, what happened?" Don't get shook necessarily. Home Depot. I think it's still stabilizing and setting up. I still like that. Still valid. Hood. Earnings, that's not really viable. IBM got beat up after earnings. We'll see if it can stabilize. IWM. I think IWM looks valid for a setup if you like small caps. This is all still the same support level. This is all still the same selling cycle and still trying to hold support right on top of the 50. None of that looks concerning to me. JCI, sideways. That's industrials. KKR. Still looking for a bullish setup here. MasterCard looks great, but you've got earnings, so be careful. McDonald's. McDonald's. Had some bad news. At this point, we all agree that it's just waiting for the McRib to come back out and boost sales. The holiday savior. Meta. I think Meta has prospects other than the fact that it's got earnings. I mean, that's what we're looking at this week, right? We've got Apple, we've got Google, we've got Meta, we've got something else. Apple, Meta, Google. Who else? Someone else big. I don't remember now. Morgan still looks fine. Again, this one had that big engulfing. This one had a little extra volume. Well, let's keep an eye on that. Microsoft, that's another one. Big Tech is reporting this week, so we'll watch that. A lot will be coming from that. Netflix, I think Netflix looks pretty strong, actually. NVIDIA still got some strength and possibly setting up for a flag in NVIDIA in Taiwan. TSM is our other. Here's our only live trade still on. Looks great. Anyone still holding this one? I hope a lot of you are. Yeah. That one gave us a nice Friday for sure, right? It's always nice to get a good little, just something that's the third in a row right there. You can see we've been just kind of tracking. PLTR has been our champion of the fall. Stock of the year for sure. PayPal. If anyone ever took it, I don't think anyone did. Got earnings coming up. Qs look pretty strong right now. RTX could be setting up. Southern could be setting up, but you've got earnings coming up, so be careful there. SoFi, overextended earnings. It'll be an interesting week. Overall, I definitely still feel more bullish. Tesla, overextended. Taiwan. Taiwan Semiconductor. The stochastics hasn't turned yet, but I'll tell you what, that was compelling right there. Did anybody pull the trigger on Taiwan? TTD still very strong. Very strong still. The dollar is just crazy strong right now. If this doesn't come back down, that's going to be problematic for the market if it stays there for a long time. That could be a little bit of, this is something else I'm watching right now as well. The VIX, what am I looking for this week? If we get a lower high, that's going to really kick my bullishness into gear. Yeah, something like this back here where it's like, it's going to go, and then it turns around. That's a nice little signal right there for me. Walmart pulling back. Real quickly, let's get through the XLs, and then I'm going to show that those other documents. XLB, lot of pullback in materials. Communication services still looks pretty good overall. Energy, Israel responded. We're really not seeing all that much, so I still am leaning towards that. Energy has shot already. Financials still look strong even with that weird Friday. Industrial still looks strong. Technology looks strong. I'm happy with those. Staples has ebbed as a defensive. XLU. If I trade it again, I'll probably either trade XLU or SO. Healthcare is way down. Not thinking about that at all. Consumer discretionary a nice little reversal from Tesla. Okay, let's move over here. And real quickly, I think the person who asked left. I'm going to show it anyway. But if for now, if you're coming in, the best place for you to go is to the there's the trading plan to download. There's the market posture to download. Where is the... Sorry, I can't find my own documents. You can see why it's so important for us to have those courses. Where is the content library? There it is. Content library. And I click here. And I come in. Shabango. Check back for under construction. But still available. Oh, I can't write it. But here you have all of these videos that will become courses. There will be a 1-minute snippet course. So we can just watch all these fun 1-minute videos. There will be a trading plan course, and I will get the analytics put in place. There will be a market posture course. So Bob, all of those videos are right here and available for you to go take a look. The Trading Foundations course and the Options Foundation course, all of that will be organized and put into place for you. So check that out. Other than that, thanks for giving me a little bit of extra time. I know I ask for it every week. You guys are amazing. Schedule, I'll see you tomorrow morning, 15 minutes before market open, as we transition our market posture into our trading posture. And once again, newbies, feel free to reach out to the group. They love helping. It's an amazing reciprocity within amongst our group. So, yes, great to see everybody. Enjoy the rest of your Sunday. As always, happy trading.